Yeah, obviously, it's in some senses it's quite important what happens in the economy. But to be fair, I mean, generally markets look through these sort of one-off type shocks. You know, whether it's a hurricane event that we've seen in the States many times, or all sorts of issues you get over the years. These, you know, there's an argument they can trigger recessions. They can be the shock that does it. I think it's highly unlikely, particularly when you think of all the recent virus outbreaks we've had over the last sort of 10, 20 years, whether it's SARS or bird flu or MERS or even Ebola, all these sort of things. Actually, markets often look straight through them. Economies bounce back. Spending's a bit either deferred or it goes on other items. And generally, economies, you know, you get a one-quarter GDP hit, maybe it's China focused or it's a little bit more global. They look through these things.
Yeah, eventually they do look through these things. But as we were just talking about, there are certainly sectors that are getting hit. You know, the airlines sector got severely hit this week, basic resources, luxury, any single sector that has exposure to China. So when you think about your trading, are you looking to redeploy cash away from anything that might have some sensitivity towards China here?
Well, I think what these things do is they create opportunities to get into stuff you might want to get into. So they're short-lived and short-term, and you know, people have to hedge their portfolios, so they hedge positions in individual names, whether it's airlines or similar types of stocks. And that hedging creates the downside, and that creates the opportunity. So that I would see this as an opportunity to move money into things you want to move it into.
Now, one element that has popped up in the last couple of days is the movement in the renminbi. So yuan has again broken through that key psychological level of 7. We sort of bounced around there last year. It appreciated into the phase 1 signing, and now we're coming off again. Do you think there's a risk that the Chinese authorities' response to the coronavirus outbreak will lead to perhaps a breach of what they agreed on in phase 1, either from the currency side or either via very strong support for some of their state-owned entities?
Well, again, I suspect this is a bit of a temporary thing. And I mean, it may be also that the market's thinking they need to price in a bit of loosening out of China to reflect the response to the short-term economic upset that's been created by the virus. So it may be the market's thinking they need to price in a bit more of a cut there, and that's part of what's going on in the currency. But again, I wouldn't read too much into these things. They often correct themselves and reverse, and as I say, these are opportunities.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.